Ladies and gentlemen, welcome back to the family. This will be another great video and enticing one. So if you've not subscribed to my YouTube channel, remember at least to subscribe and hit the notification bell so that whenever I upload a new video, you'll be notified. This video will be very great. At least it will be just a commentary regarding the trade that we took, the EURNZD trade, and the framework as to why we did take the trade. Now, of course, we do frame our trades from the higher time frames, in the matrix, the different time frame combination matrix that you always choose. Now, my highest matrix, at least from the time frame combination, was the daily time frame. Now, let me hide the drawings before. Now, in the daily time frame, you can see that the market has been pushing to the upside for quite a very long time. It has been pushing to the upside and breaking these short-term swing highs, swing points, the highs. So the market has been pushing to the upside, signaling that indeed we are in a bullish push. Now, I was drawn closely to this high, or rather the short-term high. Now, whenever the market was pushing to the upside, my concentration was this high. What resides above this short-term high? Liquidity in form of buy stops, because we have the breakout traders who want the market at least to activate them to break above this high so that they have their buy stops in place, so that whenever the market breaks above this short-term high, they'll be tagged into buys. And you also have the stop losses of the sellers who are anticipating price at least to reach at this resistance level. They'll see it as a resistance level. So whenever the market reaches this point, they're anticipating at least they'll be tagged shorts, so that at least they'll be selling in the market. And the stop losses will be above the short-term high. So we have a lot of liquidity residing above the short-term high in form of the buy stops for the breakout traders who are anticipating the market to tag them in the long positions. And they also have the stop losses for the early sellers. So the market will take out both the buyers and the sellers, the breakout buyers and the early sellers who have the stop losses above this position. I don't deny that we have an order block at this particular point. Indeed, the market reacted. So yesterday it was a down close day because of this bearish candle. So the market was bearish yesterday. I don't deny. But my essence of concentration, at least I want to see this high taken out. And remember, I told you, whenever the two things that price strive to do, at least you'll have a better framework and you'll have a good narrative of whatever price seeks to do. So the two things I've been singing all over from our Telegram live stream. Hope it is not new to you. Now, there is a lot of liquidity that is residing above this marketplace. That's why I'm seeing it as a zone of liquidity, a magnet to pull price towards it. So I'm anticipating at least this high to be taken out. At least I'm anticipating a delivery. At least this high should be taken out. The market has been pushing for so long to the upside. Now, in the 15 minutes, I won't divulge much onto the other time frames. Now, the 15 minutes now, it is where you should concentrate more, because you saw the trade that we took today. Now, the 15 minutes time frame, usually whenever we are bullish at a bullish week, we anticipate the low of the week to be formed either Monday, Tuesday, or Wednesday, latest by Wednesday. So anticipate the low of the week to be formed either on Monday, Tuesday, or Wednesday if you're bullish, and the high of the week to be formed either on Monday, Tuesday, or Wednesday if you are bearish. So this at least will frame at least which side of the marketplace you should be centered upon. So whenever you're bullish, at least having a framework of where the low of the week will be formed will give you a very good basis of where you should be anticipating to be tagged. Now, the market formed the low of the week on Tuesday. at this particular level. The low of the week was formed on Tuesday. Now, whenever the market gives us a smart money reversal, SMR stands for smart money reversal, the market began by breaking up above the short-term highs. Now, the market broke above the short-term highs, then gave a retracement. It failed to go below the short-term low, signaling smart money, at least reversal, a failed swing because the market failed to go below the short-term low. Now, if you go through the book that I wrote about the templates, now we always have the classic ICT buy the template. You can go through the book that I wrote. It is free of charge. I don't charge anything. The market opened at this particular level. It gave us a drop, then rallied higher, gave a retracement during the London session. If you are not tagged at this particular level, there was also a retracement that came in during the New York session at this particular level. Let me hide this one so that you can be able to see. So this was the retracement that happened during the New York session. Now, a lot of you are asking, why did I target this buy side liquidity and not this one? Because this one is the level that we delineated from the higher time frame. Being that I was eyeing on an intraday perspective and on the short-term basis, yes, it will eventually go above this short-term high. I don't deny it will eventually also purge above this short-term high, but I was concentrated on this liquidity that is residing above this this eyeball that I delineated here. So I don't deny that the market is moving in some sort of compression for the supply and demand traders, because I'm also a dynamic trader. I shift how I trade SND, week off, and also ICT. Now, having a framework, at some point you'll realize that indeed this compression will not hold, because the market will be eyeing the liquidity, because it's all about liquidity, ladies and gentlemen. The market is eyeing the liquidity that is residing above the market place. So Mondays through Wednesday, we're anticipating the low of the week to be formed if you're bullish, and the high of the week to be formed if you're bearish. So that's why it is always good to have a good framework in which you'll be having a better narrative of where you should be eyed towards. So the market began breaking the high, signaling that potential bulls are stepping in the market place. The market is eyeing this buy side liquidity, also this liquidity that we delineated on the daily time frame. Now, in terms of entries, there are different approaches towards the entries, because you must have a better confirmation of why you want to enter that particular level. On Monday also you saw that we took some buys because it was a classic ICT buy template. You can just go through the books. I wrote everything for the buys, and I said if you want to check on the sells, just flip everything all together, because I wanted to maximize on our time potential. At least I don't want to waste a lot of time. So on Monday it also gave us at least a buy, classic ICT buy day, and you saw it. Then on Tuesday we had some sort of sell day, at least in form of retracement. It went all the way down to check out liquidity that was residing above this below this short-term low before it continued higher. Now, below this short-term low, we had breakout traders who were anticipating the market to break them so that they can be tagged into sells, and also had stop losses for those who are early for the buys. So both of them were taken out before the market at least gave us a reversal by breaking these short-term lows and giving us a failed swing. So this was the fundamental, at least a guideline towards why we were rooted towards the buy side of it. So I'm anticipating this liquidity to be taken out, in as much as yes, I'm also anticipating the liquidity to be taken out. So ladies and gentlemen, at least try to do some sort of back testing and try to gauge the best approach and the best to at least how you can be taking these trades. Having a framework and narrative is very, very key. So see you soon. Have a lovely time ahead.